Hello again, I'm David Maurice, fee-only, certified financial planner with Worthwhile Wealth Counsel.
And I'm Andrew Worley, Associate Advisor at Worthwhile Wealth Counsel. So David, before we look at our weekly market benchmarks report, let's briefly discuss the economic backdrop for the market performance.
Sure, and as you know, Andrew, the corporate earnings season got into full swing last month for the first quarter, and nothing there poured cold water on the market. Instead, in spite of the still very solid wall of worry, as always, profits are the lifeblood of every bull market, and this one still shows very healthy vital signs. As might be expected, on top of that, the Conference Board's Consumer Confidence Index is in blast-off mode, showing widespread consumer optimism over the reopening economy. We'll have more on this for an upcoming breaking good news report, so stay tuned for that later.
All right, well, that does it for the overview. Now, let's look at our weekly market benchmark reports and the performance there and what caught our attention for the viewers. All U.S. value stocks were up, but just a smidge, not our typical report for value so far this year. And U.S. growth stocks were down a bunch.
That's true. If you look at the S&P 500, that index saw a smidge of positive gain thanks to the value component. Of course, you know, Andrew, that the S&P 500 is made up of both growth stocks and value stocks. And while growth stocks were down, value was up just enough to keep both positive by 0.25%. So you could think of the value part as being the life jacket that kept the S&P afloat last week.
And across the pond, foreign growth and value behaved much like the U.S., but still a little bit different. It's really cool to see these asset classes doing what they're supposed to do. Some are zigging while others are zagging.
Exactly.
So foreign growth and value both were down a bit, but value still outperformed growth as it did in the U.S.
And now back to boring bonds, which he's defaulted to me once again on this. Not that bonds are defaulting, but foreign bonds were the biggest loser, dropping the most by 0.8%. TIPS, that's Treasury Inflation Protection Securities, saw the most gain. Sad to say that the most gain was only 0.25%, but hey, we'll take gains across the fixed income from anywhere this year, as bonds are really struggling just to stay in the game.
Well, that's it for this past week. Nothing earth-shattering there, but still a pretty decent report. I'm Andrew Worley, Associate Advisor of Worthwhile Wealth Counsel,
also known as
Picky,
and I am Petty, and we are
the
Picky Pedants of Worthwhile Wealth Counsel. Have a great weekend. We'll see you again.